Today, January 6th, 2026, we are standing on the edge of a precipice. What is happening today is not just another market correction. It's not another healthy pullback that we can recover from in a few weeks. This is something far greater, far more significant. What we are witnessing today is the beginning of a financial war that is going to reshape the global economy. And let me be clear, this is the moment when the Western front of this war has officially collapsed. For years, we have been the voice of resistance, shouting into the void, trying to warn the world about the manipulated price of silver, about how the vaults were empty and how the banks were naked short. And for years, they laughed at us. They called us conspiracy theorists, told us we were fools, and that silver was just a pet rock, a useless investment. They mocked us, told us to buy tech stocks and stay quiet. But today, the laughter has stopped. The situation has changed. One of the largest financial institutions in the world, Bank of America, has officially capitulated. The same institution that has consistently shorted precious metals for decades, the same institution that has warned its clients against investing in gold and silver, is now telling the world they were wrong. They raised their gold target to $45.38 per ounce, more than double the previous highs. And this is not a mere prediction. This is an urgent call from the heart of the financial system. They are admitting that the system is broken, and the fiat currency model is nearing its end. Now let's talk about silver. For years, Bank of America, along with other Western financial institutions, has been suppressing the true value of silver. But now they've acknowledged the inevitable. According to their research, silver is about to explode. And here's where it gets shocking. Bank of America didn't just throw out a modest prediction. They said that silver could hit $39 per ounce based on the 1980 ratio, and potentially $135 based on the 2011 ratio. This is not a minor shift. This is monumental. This is a game changer. A shift so significant it signifies that the entire financial system is on the brink of collapse. But why the sudden change of heart? Why now? Why have they suddenly decided to recognize the true value of silver? It's simple. They are trapped. The very system they helped create is collapsing under its own weight, and they know they can no longer suppress the price. The physical metal is gone, and with it, the ability to keep the price low. And while these banks are scrambling, China is executing its strategy. The People's Bank of China has unleashed the largest monetary injection in history, expanding its M2 money supply by a staggering 48 trillion yuan. For context, that's more than double the entire M2 money supply of the United States. But unlike the U.S. Federal Reserve, which uses money printing to prop up financial markets and real estate, China is using its newly printed money to buy real, hard assets, gold and silver. And this is where the real shift is happening. Let's look at the situation from a different angle, one that shows just how dangerous the situation is for the banks. Bank of America, along with other major financial institutions, has accumulated a massive short position in silver. How massive, you ask? According to the latest reports, the Western banking system's combined net short position in silver is estimated to be 4.4 billion ounces. Now, let's put this number into perspective. The entire world, every mine in Mexico, Peru, Poland, and Russia combined, produces around 800 million ounces of silver per year. That's the limit. There is no way to speed up mining, no way to print more silver. You can't manufacture more silver, it's a finite resource. So when you do the math, you realize the scale of the problem. The banks have sold 5.5 times the entire annual production of silver. They have over-leveraged themselves to an extent never seen before in financial history. And this is not just reckless speculation. This is financial suicide. The paper market has been held together by the thinnest of threads. And now that thread is snapping. The physical market is in complete disarray. And the banks are realizing that they are holding a massive liability they can't cover. So what's next? What happens when the paper market collapses and the physical market takes over? First, we need to understand the role that China is playing in this scenario. While Western banks are busy fighting a losing battle, China is quietly preparing for the inevitable collapse of the fiat currency system. They are buying up gold and silver at a pace that is unmatched. China's strategy is clear. They are stockpiling as much physical metal as possible, knowing that in the future, these assets will be the only true form of money. They are not just buying to diversify their reserves, they are preparing for a new world order. one where they control the majority of the precious metal supply. And the West foolishly is playing right into their hands. The implications of this are massive. As the price of silver begins to rise, Western banks will be forced to scramble and buy back the metal they've shorted. But there's a problem. The silver simply isn't available. The mines are running dry, production is falling, and the cost to extract the metal is skyrocketing. Meanwhile, China's buying spree means there is no one left to sell. This is the perfect storm. A market imbalance that will drive the price of silver to unprecedented heights. Now we arrive at the inevitable conclusion, the short squeeze. The banks are in deep trouble. They've sold silver at $20.25, and now the price is soaring past $80 and they are underwater. They are losing billions with every rise in price. But here's the critical point. Who is going to sell them the silver they need to cover their short position? The answer is simple, no one. The sellers have disappeared. China is buying, and the rest of the world is holding on to their metal. So what happens next? The banks will be forced into the open market, bidding for silver at any price. And here's where it gets interesting. As the price skyrockets, they will be bidding against a vacuum. No one is selling. And that, my friends, is how you get a vertical price move. We are not talking about a gradual increase in silver prices. We are talking about a move of 100%, 200%, or even more overnight. The price could shoot up to 150, 200, or higher in a single trading session. This is not speculation, this is a mathematical inevitability. The supply of silver is fixed. The demand is rising exponentially, and the paper market is about to implode. It's all coming to a head, and the squeeze is going to be epic. So what should you do now? What action should you take in this critical moment? The first and most important thing is this. Do not sell your silver. If you are holding silver, do not let the price of $80 fool you. That is a paper price, an illusion. The real value of silver is far higher, and when the paper market collapses, the price will jump to levels you cannot even imagine. If you can still find silver at these prices, buy it. Buy the premium, buy the scrap, buy the junk silver. Clear the shelves, because once the squeeze begins, you won't be able to get any more. This is the final countdown. The Western Front has collapsed and the enemy has capitulated. We have won the argument, now we need to win the war. Hold your position, buy more if you can, and never sell your silver for paper promises. This is the transfer of wealth. This is the moment we have all been waiting for. January 6, 2026 marks the beginning of the greatest wealth transfer in history. The banks have failed, the Chinese are preparing, and the silver squeeze is about to begin. The target is locked. The window to act is closing fast. The road to triple digits is wide open. Do not waver, do not blink. This is the moment we've been preparing for. The red alert is on. Go, go, go!